Welcome everyone, Simon here from the Wells of Wall Street. Today's video is Quant, that is QNT on the exchange. We will go on to the chart shortly, but let's first of all take a look at a few updates from this absolute powerhouse of a chain and technology. Now, Quant is one of our highest regarded projects that we hold in our asset portfolio. This one in particular for me is very crucial for the future of CBDCs and digital currencies and things like this. But it's also delving into other areas as well. I say delving, it's been doing it for some time. But we've now got the tokenomics here, the technology behind Quant to be able to do some really extraordinary things in the world. Now we'll go on to this video in a second, which is basically a snippet taken from a recent webinar that these guys did about programmable money. We'll talk about that a bit more after this. So let's just play this quickly so you can have a listen in.
It really automates a lot of complex business processes and allows you to code in logic into money. And you could say, if this delivery happened on time, automatically tip the delivery driver. If I receive these goods and services from overseas, automatically pay the tax and excise to HMRC. I don't want the hassle of doing it myself. So we're going to see a programmable way of how we're going to operate. And we already do this today. I mean, the way we use our systems and phones and devices, we're already used to being so digital and automating as much of our digital life as possible. It's just going to be money next for us.
Now, that is a really interesting point. So there's a couple of areas I want to discuss about this. So yes, there is the automating fact, making things easier and even quicker than we already have before. Now, if we look at today's life that we have in terms of how we bank, how we roam around, how we transport ourselves and things like this, we order things, we pay for things. There's still a manual aspect to it in some cases, but things will change over the next few years where we might have like the RFID chips and things like this, which are coming very soon. And this will have the ability to pay for things as you walk out of buildings, etc., without having to get your phone out, without having to get a bank card out or anything like this. But also the transactions will be verified and processed because of blockchain technology in a quicker fashion. And this, you being your DID, the digital identity, is a really important aspect to think about. But there's another side of this coin that's still a bit interesting to think about consciously, not just as an investor, but also in real life as well. We talked about like the programmable asset aspect that we just spoke about here with Gilbert Verdin here, the CEO of Quant and founder. Now, we could argue that there's a bit of a control mechanism here. Yes, everything will be programmable, automated, quicker, faster, but we also then again, as we have done recently with cashless payments and digitalization of things and automation of things, we've become quite lazy, and a lot of people will with open arms take this on board, and that's fine, and I will probably do that to some extent as well. But I'll also be aware that the more you give to automation, AI, technology, the less freedom and control you have with your own assets, with your own life as such. And CBDCs are an interesting topic in general because there are good and bad things about it. He mentioned about HMRC, for example. Of course, CBDCs will allow the capacity to have everything tracked and traced. I've always said, here in the UK, November 2022, this year, the old notes will not be operable anymore. You can't use them. And I'm talking about the old paper notes. So this means that people who have perhaps been hoarding money for the last 20, 30 years, maybe longer, will have a load of notes there, potentially under mattresses or in freezers, because they do hide them in freezers, and they won't be able to use them. So what happens? They have to cash them in, whether that means converting them to the new plastic kind of money, or just keep it digital. They'll probably be recommended to go into cashless payments and using debit card more and things like this. So it's almost a forceful tactic, but also it means that the money then comes back into the system and it goes into a traceable format, because then if you ever need cash again or payments or everything from scratch is traceable, even though it's still in a physical plastic aspect. Of course, more digitalized it becomes, even more traceable it becomes. This means that we don't have any more tax avoidance. It means there's less fraudulent activity and less money laundering, all these things that hopefully help us in the economy because of the cost of insurance and all this manipulation and fraudulent activity. This is why a lot of premiums are so high. But on the other side of the coin, and we've made this reference before, when we were looking at, for example, the COVID relief fund that Americans did throughout 2019 to now, they distributed the stimulus checks, but actually in the bill, if you read through the bill that they created, it was actually also a testing ground from the Federal Reserve using digital dollars. And within that bill, it specifically says in the terms and conditions that the Fed has full rights and control to be able to control people's wallets and decide whether things get clawed back or controlled. So it was a testing ground. And I'm pretty sure it worked because everyone and every country, government around the world will be taking on CBDCs in the next few years, particularly, as we've said in multiple videos, around the RTGS system, replacing the existing SWIFT and CHAP systems. Around November 2025, we will probably see the full switch on. So next year is going to be very important for the trials and the integration. And then we'll be delivering in 2025 this new financial way of working. Programmable money, as these guys have just described it as in the video. So that in mind, we must, as I said, consider it's great investing in these projects, but also understand the actual aspects of what this means to your life in the future. And as an investment point, and I've always said as well, 90% of people around the world won't realize they have a centralized or a decentralized path to go down. They will just go based on media and they will go based on what they're being told to do. If we educate ourselves now and build that knowledge, we will have the choice. We will be able to make other people aware of this as well. And I think that's really important. We have a responsibility. It's funny because I'm here investing to try and make some money, and then I'll hopefully try and be able to fix the world a bit better. But also, there's an arguable moralistic ground that we all have to sit here and think, well, actually what we're investing in, not just Quant, a multitude of projects. I'm not saying Quant is a horrendous project. What I'm saying is that we need to be aware that in some cases, we are actually moving towards a social demise. This is really important to understand. So a couple of other things that we want to talk about here. The regulatory approach, which is very important. So Quant being an ISO token, ISO 222, this is already standardized for the future of new future financial messaging. What I mean by messaging is the processing, verification, and the actual transaction itself of finance. And it's the new way of working with this digital finance, digital currencies that are coming. So it's important to understand when you're investing, what you are investing in terms of like its future capabilities, technologically wise, but also is it going to adhere to the regulations? Because we're going to lose a lot of cryptos, guys. We're going to lose a minimum of 50% of all the crypto assets that are out there because they don't fall within the guidelines of the existing regulatory systems or indeed the new ones. You have to be aware of this. But Quant is for sure one of those that is going to absolutely fly through these. It's already standardized, as I said, it's already regulated, and it's always working with things like the FCA. Here in the UK, for example, which is the Financial Conduct Authority. These are the guys that basically decide not just with advertising and things, but also whether something is legally done correctly to protect the people, supposedly. So really important to understand this is a really big factor of Quant. And I also like this. QRC 721, this is part of the tokenomics or the aspect of what Quant is capable of. Now, people need to understand that NFTs aren't just art. It does mention here, ironically, about NFTs being art related. This is a big market, and rightly so. It is a big market, and it is certainly one that people have been more interested in because they see the visualization of it, and they can perhaps cohere with the fact that, oh, I like the look of this, and yes, it's probably more value, but actually I want to own it, and you own it digitally. But it also means so many other things. In gaming, it can mean interoperable items that you can take to other games or you as an avatar. There's also the housing or the real estate markets and commercial estate markets where NFTs can be houses, they can be cars. And this arguably eradicates the intermediaries in some aspects, in the terms that you and I eventually will be able to buy or sell a house between ourselves using KYC, smart contract, and NFT capabilities to determine the exact value of this house, not what someone's come around your house and go, yeah, I think it's worth this because it looks nice, or this, that, and the other, or I'm having a bad day, it's this much. It will be done on algorithm of all the materials of your house, of any extensions that you've done, and all those materials will be on blockchain to determine like how much value you've really put onto your house, but also the algorithm of supply and demand and the actual markets themselves. So it will all be automated. Again, back to my point, automation, brilliant, speeds things up. We don't have to wait for housings to sell within 3 to 6 months. We could probably do it within a day or two quite easily. You can look at companies like Proppy that have done sales and buys and deed exchanges within a couple of days and even a few hours using the NFT process. But we also relinquish the control mechanism of having to be able to dictate what we want to try and get from our house. Is that a bad thing or a good thing? Who knows? I think it just becomes a fairer system, a more leveled system, and we may have to potentially look at reducing the inflation and all the other crazy things like percentage interest rates increases on houses, because actually everything will be automated and on an algorithm that we won't have all this fake nonsense going on in the background that we simply don't understand, but we just adhere to it anyway because it is what it is. So again, pros and cons. And as I said, I'm a huge holder of Quant. I love Quant. But you also have to understand the other side of things as well. But yes, the NFT shift is here. And they say here that there's a multitude of different aspects here of like how much money the industry has been costing in terms of fraudulent activity and stuff like this. This will hopefully stop with the utilization of more KYC, more DID. And that includes like social media and all these other things that are simply, in my opinion, not regulated enough. Despite them showing that they may look like they're regulated, we can clearly see, that people get away with things and all this stuff. So this is really important to understand, and also the interoperability factor. It's really important that most crypto assets out there, or crypto projects or blockchains, are able to cross-chain as well. And this is going to be a big fundamental factor in things like gaming, where we have the abilities to utilize different chains. Because people will be using different things, there will be different technology on different chains, and it's important that we can bring those together. And eventually, one day, there will just be one huge ecosystem, and it will just work. And that's the beauty of it. And Quant are already thinking about this ahead of time. And as we said about smart contracts and tamper-proof processing, verification, all of this within the smart contract of this QRC721 tokenization. This is really important to understand and appreciate as well. So those in context as well, we've already talked about digital money, fungibility and interoperability. And again, cross-border payments will improve significantly. It will become cheaper, it will become faster. No more waiting 7 days potentially for a financial process to be done or a conversion rate. These will be almost eliminated and become essentially near enough gas-free or fee-free in the instance of traditional financial methods. I think this is really exciting to some aspects, but again, do we relinquish our own control? And we will eventually see with CBDCs the opportunity for federal governments or governments themselves being able to dictate whether we do or don't get money, whether that's through a stimulus check or something like furlough here in the UK, or some kind of benefit, or indeed not being able to travel because you haven't done this and that. It's all about automation and algorithm and AI, but equally be cautious about the other side of it. So I thought I'd bring those points to your attention. Now we've got that out of the way, let's go into the chart for Quant. Some good moves here in terms of buying opportunities. I did say in a few videos back that I was anticipating that we would come back nearer that $87 mark. Unfortunately, we haven't hit that just yet. The lowest point being here in the last few days at $92. I still have my buy order back around here. Although the fib retracement level's at 89, I've got mine on the macro level just above it in between these lines at around $87. I still think that it could come down to this level, maybe even lower. But why am I saying this? We've talked about this in multiple videos now. We talk about the black hole here. We have to look at historic data in all the charts to understand and identify potential support and resistance levels. And right now, we're approaching this area where we matched back here in around June 2021 last year. We're also in an area that we drew ages ago, February 2022 this year. And as you can see, there was rejection here, but also resistance here, and support here. Now, in my opinion, 1, 2, 3, 4 areas to look at this particular area over the last year and a half is not enough for me to decide that this is a support level yet. So that's why I'm still thinking that we could come down lower. And my other buy order area is literally around this area as well, just under $80. Yes, it could come down potentially lower than that still. We are in a bear market, we're in a winter market. Things are going on around the world still. We're in situations with inflation, with price hikes, energy hikes, all of these things. You have to understand the macro levels of the world, as well as what's going on in the charts and our assets that we hold. So with all those things in mind, you could argue that there's a trend in people's minds that they're simply still waiting. They're still in this methodology of lower prices within the crypto market and potentially lower to come. It might swing around, but we have to just be aware of this, be conscious of it, and react in both the ways down as well as the ways up. This is why DCAing is important, and I've got my limit orders in there. If they don't hit and they rise, fantastic, we make money. Brilliant. So we're almost on a win-win there. Now, before I go into performance indicators, just touching back on this point, this is where the area I think we could hit, and I've already mentioned it, why. And I do think that potentially we could come back down to this area, especially as the last few days you can see some stability. We saw this stability back here as well a couple of weeks ago, and it dropped back down again. That's not to say we repeat the patterns just because we see them recently, but I do believe in the general trend that we might start seeing the lower numbers. We're in a sell mode right now on Quant, understandably so, because we did rise originally from these lower points here of around $40 all the way up to 130. There's no doubt in my mind that people wanted to take profits at various stages along this journey. But now we must understand, we need to identify and confirm the real support levels. Okay, the FOMO's removed, the announcements are dying down a bit. We now need to understand where we should be. So this is the first stage in my opinion. And then the next stage, as I said, lower than this, could arguably be around these marks here, at just under $80. We'll have to see if that pulls in, but that's certainly where my other buy order is, and we'll have to see. It's certainly a strategy that's worked for me over the last few years. I don't see it dying off just yet, but we might see some retaliation here, a bit of a spike up and then another drop down. But don't be alarmed, these are opportunities to buy an unbelievable project at very low prices. Anything sub 100, I feel, for Quant is absolutely phenomenal. Obviously, the lower the better because the values are so significant. Obviously we're talking about like the difference between 40 and 130 is quite significant here. So that's why DCAing is important, but also your strategy of deciding whether you're doing short-term trades or long-term. For me, I'm long-term, so I'm just holding out till Quant gets to $1,000 or more, which I know it will in the next few years, particularly as the switch-ons come. So I'm not really fussed whether I'm buying it necessarily at 50 or 130. Obviously, I want to be buying it as much as the lower regions as possible, but we don't have a crystal ball, so you have to be really strategic in the way that you do this. And back to the RSIs down here, the performance indicators on the right hand side, we've got the RSIs here, relative strength index. This is telling me the performance over various different time frames, so 14-day, 28-day and 90-day closes. And right now, 14 days at 43. This is a really good bite point for me around that 40 mark. And the same on the 28 day as well, so we get a bit more of an average out further out. 48.8, I would like to see this a bit lower, around the 45 to 44 mark before I start thinking, actually, I'm going to go even maybe a manual approach to buying Quant. But actually, I think once we get to that 45 mark and we see 14-day coming to around 40, this is where I see us probably hitting that $87 mark anyway, so it should kick in. The 90 days at 49, very much in the middle. So obviously 0 to 100, 49 being relatively around the middle point. This is suggesting a bit of a limbo moment in the long run. We're talking about over the next, or the last 3 months, of activity. This would indicate to me that we're still understanding where we should be with Quant. So it's a bit risky. Just jumping in with all your money just because you got paid. You should be strategic and thoughtful about how you're doing it. So that's where I stand with Quant. And the performance indicators don't lie either. We're now into a negative again on the weekly and the monthly. Understandably, as we said, the profits have been taken. But that 3 month is still strong. And I think that will take us nicely into the few upcoming months remaining in 2022, where we might pull these numbers back into green eventually. But I do think that we need to stagger around, as I said, and find those support levels first before we do that. However, the 6 months and the year in general are looking quite positive compared to where they were 3 months and 6 months ago. So there's positives and a bit of negative in there, but in reality, as I said, it's a powerhouse of a blockchain and technology. What it's capable of doing, what it's already doing, is something that you have to consider as part of your long-term investment. It is arguably in people's minds more expensive than a lot of assets out there, but you need to understand what it is. The supply is very important to understand as well, but also the aspect of what it's capable of doing in the future. So these are really important things to understand and take note of. That's very much wrapping up Quant, guys. Let us know what you think about Quant in the comments below. What have you been doing with your assets of Quant in your portfolio? Have you been buying, selling, holding? Are you doing what I'm doing strategically with DCAing? Let us know. But until the next video, guys, thanks very much for watching this one. Do not forget, please, to also subscribe and hit that like button if you have not done so already. But until the next one, guys, thank you so much for watching. We'll see you very soon. Bye-bye.